Hi, good morning to those that have just joined. I'm Mark von Grundher. I'm a director of Benham Reeves and I'm based in London. And thank you very much for joining us today. Sorry, we're a couple of minutes late. It's just we're waiting for a few more people to join because these things always take a bit of time. But I'm gonna start now, and then I'm gonna be followed by my colleagues Melvin and Michelle, who are going to talk about a couple of projects we've got, and then we're going to, all three of us are going to try to answer as many questions as we've got. We've already had a couple of questions since we went live, but so anyway, I'm going to now talk about the market and give you a general update. So as I said, my name is Mark von Grundher. I'm a director of Benham Reeves. I'm based in London. I've been working in property for the last 25 years. I know I don't look old enough, but I have been working in property for 25 years. And we do quite a lot of these webinars. And since the last one that we did, so much has changed. As lockdown restrictions here in London have gradually been eased over the last couple of months, most business activity has resumed in London. And if doomsday predictions were to be believed, we'd be going through a massive property crash right now. But instead, the London property housing market is enjoying a post-lockdown mini boom. Homes are selling at the fastest rate in a decade. In fact, Rightmove, which is the UK's biggest property portal, has reported record levels of buyer activity, with the highest numbers of monthly sales agreed in 10 years. The number of homes sold within 7 days of going on the market is up 125%. That's over double compared to last year. And that number is 1 in 7 homes sold within a week. And if sales continue at this rate, supported by the low mortgage rates, then prices are going to rise much faster than predicted. The truth is, prices did not actually fall during lockdown. When demand falls, prices don't necessarily follow suit. Most sellers decided to wait out the lockdown or put their property on the rental market rather than sell at a discount. This resulted in a drop in transaction levels rather than a drop in prices. After a 14.5% rise in July, transactions in August rose a further 15.6%. And the Bank of England reported that mortgage approvals quadrupled in June after hitting a record low in May. And they've now today it's been announced that they've soared to a 13-year high. And agents are reporting that the numbers of offers accepted during August was the highest in more than 20 years. More than twice as many homes of £1 million and above sold in August than in 2019. The Centre for Economic and Business Research, the CEBR, estimated 150,000 house moves were put on hold because of the pandemic. And they're now back in business with people transacting. Nationwide, the mortgage company said that in August, house prices registered their highest monthly increase in more than 16 years. And according to Zoopla, with demand continuing to outstrip supply, house price growth looks set to remain at between 2 to 3% by the end of this year. The surge of activity in the market is nothing short of exceptional. The recovery in the property market has so far been V-shaped. For those drawing comparisons with the 2008 recession, though, the main difference is that then the recession was financially driven, whereas the government today made a conscious decision when dealing with lockdown. They put in place a lot of measures to support the housing market and the economy, the wider economy at large. Across the board, there's been a dramatic upturn in inquiries now from both investors and homeowners, and most properties are actually selling close to the asking price. Meanwhile, activity in the lettings market has been robust. However, higher levels of supply and weaker levels of demand has had an impact on rental values. The rental market is extremely price sensitive right now. Accurate pricing is absolutely key, with landlords needing to be flexible on the rent they'll accept in order to let a property quickly. And the properties, of course, letting most quickly are those presented in the best possible way. But let's not lose sight of what really matters. London has proved time after time that it's an extremely resilient city, be it in the face of terrorism, recession, or illness like now. London's an international hub for business. The city's strong economy, thriving business outlook, and prosperous jobs market are among the reasons people choose to buy, live, and work in London. London property is a bulletproof investment. It's always been the safe haven and for long considered one of the world's most trusted asset classes. With its ability to deliver a regular income and long-term growth, even during times of wider uncertainty. Plus, of course, UK law is known throughout the world for its openness, transparency, and fairness. London has the highest concentration of financial and professional service firms in the world, a very strong tech sector. It's a leading global academic hub, consistently ranked as the world's top student city. Today, 450,000 overseas students study across the UK, contributing a massive £20 billion a year to the UK economy. Education's always been a driver for residential property, and just last month, a Saudi billionaire set the world record for the most expensive student accommodation. He paid a whopping £18.6 million for a flat for his daughter while she's studying in London. And that just shows the huge demand that London has from overseas buyers. And then there's the leasing or the rental market with strong rental demand by tenants, meaning minimal void periods and consistent yields. Today, 1/3 of London households live in private rented accommodation. And according to PwC, in 5 years' time, in 2025, that's predicted to be 60% of Londoners will be renting. And at Benham Reeves, we are very optimistic because this is a market with sound long-term fundamentals. Most importantly of all, this really is crucial to create some context at a time like this. Never in London's many centuries of history has there been a crisis from which markets and house prices have not bounced back stronger. And that includes the Spanish flu of 1918, the Great Depression of the 1930s, the stock market crash of 1987, 9/11, the credit crunch, or even Brexit. And as the world's major economies go into recession, investors are now looking for ways to hedge against this by investing in assets which have historically been able to deliver stable returns and quick recoveries. So why now? You know, if you can afford it, now is a great time to buy. This is definitely a buyer's market. And after 2 successive interest rate cuts in March 2020, the Bank of England base rate remains at a historic low of 0.1%, meaning that many lenders are offering incredibly competitive buy-to-let mortgage rates. Meanwhile, developers are also offering good deals now, as many have completed units which they need to sell. And we're seeing strong demand from overseas investors, particularly from Hong Kong. And after the July announcement, when the UK government offered about 3 million British national overseas passport holders in Hong Kong a path to British citizenship, there's no surprise with such demand in Hong Kong. Last weekend, there were 40 property shows. Can you believe that? 40 property shows in Hong Kong last weekend. And in fact, Hong Kong buyers are now the 5th largest group of foreign investors into London after China, the US, India, and Russia. They accounted for 4% of all purchases. The weakness of sterling continues to be a real advantage for international investors who are finding that London property offers exceptional value right now. And the biggest incentive of them all, well, it's the UK's announcement of a zero stamp duty on the first £500,000 until 31st of March 2021. And this zero stamp duty applies to both homeowners as well as investors. And right now, everyone, whether they're UK residents or overseas investors, can save up to £15,000. But you only have a 6-month window of opportunity. 6 months, it seems like a long time, but buying in the UK can take time, what with lawyers, valuers, and bankers. So if you're thinking of investing, you need to act now to take advantage of this once-in-a-lifetime offer. I've never seen it in my lifetime, and I don't think they'll ever offer it again. Overseas buyers also have a second reason to act fast, as a new stamp duty surcharge for overseas buyers of 2% comes into force in April 2021. So if you as an overseas investor act now and buy before the end of March next year, the saving on a £500,000 property would be a whopping £25,000. That's enough to have a decent holiday, come visit your property, and really, makes the investment that little bit better. This tax break has spurred a wave of transactions already, with buyers securing deals. And the first National House Price Index, released after the introduction of the SDLT holiday, revealed an increase in house prices of 1.5%. The market has now definitely returned, is in full swing, and I firmly believe this is a time of opportunity, and indeed a great time to invest to benefit from the weakness caused to sterling by Brexit and COVID-19, and our generous government's offering of zero stamp duty. And as Warren Buffett put it so perfectly, this is one of my favorite quotes he has: widespread fear is your friend as an investment because it serves up bargain purchases. Whether we're talking about socks or stocks, I like buying quality merchandise when it's marked down. And there's never been a time in history that London property didn't bounce back from being marked down. But it's still important to target your investment. London may be a single word, but within it, there are 32 different boroughs, different cultures, and different property profiles. Apart from price and location, investors need to consider yields, potential for capital growth, whether it's a regeneration area, and of course, transport links. Plus, then consider the reputation and track record of the developer. And if you're buying as an investment, which effectively is a home for someone else to rent from you, then you need to think about who they're going to be, what they're going to want, and what they'll be happy to pay for. So what do London tenants want today? Well, at Benham's, we carry out regular surveys of our tenants, and some things never change, including the old adage of them all, London, or location, location, location. Tenants want excellent transport links, clearly, less than 10 minutes walk to a station. Families, they want to be near good schools, close to other families, and near parks and public gardens. Young professionals want to be close to social life, like gyms or bars or cafes. But today, COVID has created some new trends. Working from home means demand for space for desks, and queries we now receive about internet speeds, and demand for outside space, whether that's a patio, a terrace, or a balcony. These trends, we predict, are going to feature for the longer term now. Then there are on-site facilities like gyms and swimming pools, and you'll be interested to learn that our tenant survey last year showed that after proximity to transport, the most popular and sought-after facilities that tenants said they wanted was a cinema screening room. And another tip, is that every bedroom you have must have its own bathroom. You know, only ever buy a 2-bedroom with 2 bathrooms unless it's really cheap, or you limit the rentability. The days of professional flat sharers using the same toilet have passed. And if you rent to 2 professionals, they're going to want their own bathroom, not to use the same bathroom. Many tenants insist on a professionally managed property too. And in fact, corporate tenants, all of the Japanese companies that rent through us via our Japan desk, they won't even view a property that isn't professionally managed. And the key to a successful investment are meticulous planning, on-the-ground knowledge, and a trusted independent partner. And that's really where we come in. I haven't talked about Benham Reeves so far because I wanted to give you an update on the market, but just very briefly, we've got 60 years of experience in the London property market and 16 branches throughout London, with 2 more predicted to open. We've got 1 going to open by the end of the year and another 1 next year. Plus we have 8 internationally. We were the first agent 25 years ago to open an office for our clients in Hong Kong. Then we opened in Singapore, and then in Malaysia, and then in Shanghai. We then have 3 offices in India. And we've got a new one recently in Dubai that covers the whole of the UAE and Africa. Our focus is on our clients and ensuring we'll help with everything a client needs by offering a complete one-stop service, giving investment advice, you know, what to buy, where to buy, and why to buy it. We do the handover and snagging for you, so you don't have to fly 5,000 miles to come and check the apartment's been finished the way it should have been. We'll do that for you. We can then arrange for it to be furnished so it appeals to tenants. And we have a sister company in Style Direct that specializes in that. And then once your property is a little bit older, or if you buy something secondhand, we can do refurbishment for you. That's redecorating or a new bathroom or kitchen, whatever you need. And then of course we help with the lettings and then the property management. Unlike other parts in the world where the tenant will call you, they never have your number. They only call us and we deal with everything for you. And then we do even tax returns in-house by our accountants. You know, whether you have any tax to pay, and we always get lots of tax questions, or you don't have tax to pay, you've still got to do a UK tax return, and we will do that for you. And as I quickly alluded to, everything we do is done in-house. We never subcontract anything. So we never get let down, and in turn, we never have to let our client down. Another unique difference is that we, and that's myself, my co-directors, and our senior people within the business, often invest alongside our clients in the same developments and locations, putting our own money in, clearly demonstrating our belief in what we actually recommend and using the exact same research process. You try and find another agent that's willing to buy alongside you and put their money where their mouth is. Well, we do that because we believe in London and we believe in our clients and helping them through the process. I'm certain that we're all going to look back at this time as a unique opportunity, a time when many panicked unnecessarily, selling for a low price just to exit. But those with an eye on the bigger picture, making some brilliant investments. So that's my update on the market. I'm always happy to speak to clients, and if you email me, I'm always happy to give my view on different investments if you find them independently from us. But I'm now going to hand over to my colleagues Melvin and Michelle, who will take you through some eye-watering deals on offer with exceptional savings for investors, with a first for an overseas show or for one of these webinars. We're launching today a row of brand new Victorian style freehold landed houses. And that's not buying an apartment. That's buying your own house that you can lock up, which a lot of our overseas clients request repeatedly. But generally you have to buy secondhand. Whereas today, as I said, we're launching these wonderful 2,000 square foot houses. And then at the end, once we've done our talk, once Michelle and Melvin have finished their talk about the product, we're going to come back and answer questions for you. So now I'm going to hand over to Melvin to talk about Clarendon and Denizen, and then Michelle will be launching, as I said, the fantastic collection of landed houses. So thank you very much for listening, and now over to you, Melvin. Thank you very much.
Thank you very much, Mark. We have this prepared in terms of the stamp duty savings table, which we will be able to email out to all the individual listeners out there today. I won't go through this in detail as it's pretty technical, but for foreign investors, all you need to know is that for properties from 0 to 500,000 pounds, is if you're a foreign investor and you already own a property anywhere around the world, you are charged 3% of that 500,000 pounds, which is 15,000 pounds, up to 500,000 pounds. If you have not owned any property anywhere in the world, your London property is your first property, and if you use that as an owner-occupier, up to 500,000 pounds, you don't pay any stamp duty. All right, and I'll have the scenarios of the developments listed out, and we will go through the individual stamp duties on the developments shortly. So the first development we have is Clarendon. All right, we are going to be showcasing 4 developments today, and all these 4 have this very good stamp duty savings deal and are eligible because they will complete before 31st March 2021. So I will do 2 developments and my colleague Michelle will do the other 2. The first one we are all very excited about because it has been selling extremely well in London and it's been taken up very well by the local buyers. I saw a question earlier asking, are the buyers local or international? So we have a mixture, and primarily Clarendon, why has been so appealing? Because it exudes affordable luxury. And you can Google this development up, or you can speak to any of Benham Reeves salespeople across the region in Asia, in the UAE, in India, China, Hong Kong, Singapore, Malaysia. So a little bit about this development. It's in Zone 3. It's just right above Finsbury Park. It's on the tube station of Wood Green. Yeah, it will be part of the Tottenham Hale and the Wood Green regentrification scheme, which they are creating about 4,000 new jobs in that area, in that borough of Haringey. Is next to the Alexandra Palace, which in short people call Ali Pali in London. And Alexandra Palace has also gone through a regentrification of £27 million, in which pre-COVID period, a lot of concerts, a lot of greenery, a lot of activities are done in this area. And of course, its connectivity. It has 2 tube stops nearby and 2 overgrounds nearby as well. And it's only 3 tube stops to King's Cross, which is now the tech hub of London. You have Snapchat, Google, Amazon, Facebook in that area. And the best part about this is that I stated affordable luxury earlier because you have 24-hour concierge, you have a pool, you have a gym, you have an on-site nursery and a creche, or they call it a creche, which is a kindergarten or a nursery, meeting rooms, resident lounge, and of course, they are working together with startups to bring employment or commercial areas into the development itself. So it has been very, very well received. 1 bedroom start from £477,000. Very interestingly enough, we Barclay, who's the developer for this, who's a FTSE 100 company, 1 tube stop below Wood Green, which is Manor House or Turnpike Lane Manor House. Yeah, there's a development called Woodbury Down, and the 1 bedrooms there are going for about £550,000. So, but Woodbury Down, the development that is 1 tube stop away, has been about 10 years throughout the scheme. You go in early to Clarendon is still the first phase, first launch. It's been received very well. The marketing suite is up. You're going about £477 for a 1 bedroom. Now, you going in knowing that one tube stop away, you have a transaction of £550,000 to £580,000 for a one bedroom. So rental yields are at about 4%, and the completion is about February, March 2021. I personally bought a unit here, so I am very happy because I've been informed that it will complete before this March 2021. So I'm eligible for the stamp duty savings. So if you're a first home owner, it's below £500,000, you pay 0% stamp duty. If you are an investor and you already own a property anywhere around the world, your effective rate is 3% of 477 is about £14,000. Now, compared to if you buy this after March 2021 or something of this price after March 2021, you'll be paying a maximum rate of £27,000. Okay, so it's a one bedroom, it's beautiful. If you're just using this for investment rental wise, it will rent very well. We similarly have rented a development just right across the street called Smithfield Square. It's by Barclay as well, and to a Malaysian landlord who owns it. And we are very happy that at this period, properties within this area, Zone 3, have gone up in terms of rental. So we're extremely delighted with regards to that. So this is Clarendon. And the next development that we have for you, which is part of the stamp duty savings, that is Zone 3. So now we are going to something Zone 1. We are getting many parents who want to buy something for their children. And it's right smack in Zone 1. And they want to be near the universities. They want to be near the good schools. So this one will be right smack next to Holborn, next to Clerkenwell, next to Shoreditch. Down south is St. Paul's. You're right in the financial hub, near the Gherkin, near the Shard, and it is in the square mile of London, which is right smack in the city of London. And you have two crossrails coming up along the area, and one of them is in the Farringdon station. So you are just right smack central. We still have one bedrooms here going for £750,000 to £850,000 in between. The ones we are featuring is about 7, 8, 9 here. Estimated yields are about 3.3%. Zone 1, naturally, your yields will be lower because the entry price is always higher. But the good thing about products like that in Zone 1 is that now in prime central London, you can have a better negotiating power in terms of discounts. So if you want prime central London property, now is the time to go in. Now is the time to show your hands and negotiate hard. And the Benham Reeves sales agents and our directors will help you and assist you with regards to the negotiation as well. So in terms of stamp duty savings, here you go. If you buy something before 31st March, you're paying about 4.5%, about £31,000, which is extremely low for a foreign property in prime central London. As you know, in countries like Australia, you're paying about 12-13% stamp duty. In Singapore, you're paying about 23-25% stamp duty. In London today, at this period, you're paying 4.5% stamp duty for central London, prime central London city property. And of course, if you buy after the 31st March, it goes up a bit higher. So this is a standard one bedroom. And if you are interested in prime central London, we have 60 years of experience. We have the stocks. Please speak to us. So what I'll do now is I will hand over to my colleague, Michelle. All right. And Michelle will be taking you through to the next two other properties. And Michelle will have control over the slides. Over to you, Michelle. Thank you very much.
I honor you. Good evening, everyone. So I would like to introduce to you the Elephant Park development located in Zone 1, southeast of London. So now this development is actually a master plan development by Lendlease, which is a global company. And they have completed this phase 2 development, which is ready to move in if you're interested to make an investment in this area. So it is a 5 minutes walking distance to the nearest train tube station called the Elephant and Castle, which is a Northern and Bakerloo line, which will take you directly to King's Cross, Euston Station. That's where the new HSR is going to be located. And of course, UCL, which is a popular education university for most Malaysians and foreign investors. And of course, the Bakerloo line takes you directly to Oxford Street, which is a shopping haven, as everyone will know. So this development also will include major facilities, and then you will have 24-hour concierge, gym, landscape courtyard, and of course, internally built retail and commercial spaces within the development for people to enjoy. And this will of course cater to the new norm where people want to work from home. People have an additional space to set up a new co-working space, with along with their co-workers and things like that, which they don't have to travel far. And just to show you what we have available right now at this scheme, currently there are selected of 2 and 3 bedrooms available in both at the Highwood residences and the Orchard Point residences. This one is on level 10, which is asking price at £932,000, just under £1 million for a 2-bed, 2-bathroom at Zone 1. So we are able to negotiate a double-digit discount, which will hopefully get you £838,000 final price. And this will be the stamp duty that you're looking at if you are buying, because of the completion before 31st of March 2021, there's quite a significant savings from here. So if you're interested, we can then arrange financing that is available from the Malaysian banks, or if you're interested to explore from the UK banks. Okay, now let us go through the final development that we would like to showcase, which is very interestingly a 16 units boutique Victorian style houses in Zone 2 Brixton. So it will be about 17 minutes walk to the nearest Clapham Common station, and of course the Brixton station. Clapham Common station is a Northern Line underground station line, which will take you to Battersea, King's Cross, Charing Cross, Bank, and of course Brixton is a Victoria line that will take you to Oxford Street as well. So this is not too bad on these 2 lines. So it's a 4-bedroom house, which will have your own individual private courtyard on the lower ground level. And of course, each individual houses comes fully fitted with electrical appliances, cabinets, and of course, floorings and all that are included. And of course, your own secured cycle parking in your private courtyard. So let's just take a look at the floor plan. So this development, this houses is built across 4 stories. So you can see how the rooms are segregated in these different levels. So those who intends to bring their whole family over, or planning to actually have a London base to house their family and things like that, you can actually consider this development, because everyone can then stay cozy inside, and of course have barbecue at your private garden. And we are able to of course negotiate a double-digit discount, which will then bring down the price to just under £1.2 million. So this will be a significant savings for you, because these houses are already completed. So basically you are looking at, 1.5% discount in terms of stamp duty of how much you pay if you are a first home owner. And of course, investor stamp duty wise, you save, close to about 20 to 30,000 pounds there. So, and of course, you also save in terms of the 2% additional duty for, I mean, if you are a foreigner and you're buying this for investment. But otherwise, please have a chat with us if you need any assistance in terms of getting financing, clarifying what budgets you have in mind, and then we have all these developments in-house that we may be able to assist you with in terms of your investment plannings. So we will end this webinar, and then we will get on with the Q&A session.
Thank you very much, Michelle. That was very exciting. I missed it if Melvin said, you're talking about Clarendon. Melvin himself bought in Clarendon, so I must mention that. So he bought there. So just like I said in my talk, we do buy in the projects. In fact, we're very interested in the houses. We think the houses are exceptionally interesting. So we've had quite a lot of questions come through both before and during. So number one, few people have asked me, is the presentation going to be shared? Well, let me just tell you 100%, either today or tomorrow, we will be sending out the full presentation, these slides. But if you want some more detail, then just get in touch with us. Get in touch with me or Melvin or Michelle or anybody in our overseas offices. Everybody's up to speed on what the London market's doing, and we love to help you. So one of the first questions we've had is, and maybe Melvin can answer this because he talked about the stamp duty, is Lillian asked, is the stamp duty holiday only applicable for first-time home buyers, or is it for everybody?
So there's two tiers. First homeowner buyers, like I've shared earlier, up to £500,000, they pay 0 stamp duty. If you're an investor and you already own a property anywhere around the world, let's just say if you live in Malaysia, you already own your own house in Malaysia, then 3% applies. If you live in Hong Kong, you already own a house in Hong Kong, and the London purchase is your second property, third property, fourth property, it doesn't matter, 3% applies up to 500,000. Yeah.
But in effect, you're 100% Melvin, thank you for that. But in effect, everybody, that's what I said in my talk, benefits from at least £15,000 saving on the stamp duty, because it's up to £500,000. So that's whether you buy one of the houses that Michelle had for 1.1, or you buy a flat for 500,000, you save £15,000. Plus you save the additional stamp duty if you buy before April next year. So that's an additional 2%. So that on a £500,000 purchase is £25,000. So we all have that. So everybody gets the benefit, and people have been rushing. So it's a very good time to buy. So the next question is maybe Michelle, you can ask this. Who have the buyers been so far? Are they local or are they mainly overseas? The buyers buying in the market. So Justin asked that. I think it's quite interesting.
So I think in London as a metropolitan city, there is actually quite a fair bit of both locals and foreigners, but really subject to the area that you're looking at. I would reckon places like Zone 3 Clarendon would appeal to more locals. So you may want to look into that area if you're planning to have, a more local community, a more local feel. But if you're looking in Zone 1, then you may have to expect a more international audience. Like you have tenants from all around the world, and anyone can buy into Zone 1 because everyone loves to be in Zone 1, because of all the amenities and facilities and where they can get into, especially to work. So it really depends on where you are looking to purchase. But if you're looking to buy into a local area, then maybe a bit further out, like Zone 2 and Zone 3 would be good.
And I agree with that. I mean, we have got an awful lot of overseas buyers buying London because it's a great place. It's very transparent. It's very safe. It's good investment. And it's also a great place to live. But at the moment, obviously, most transactions are non-overseas people, are homeowners and people that move in the UK, because obviously we have a 60 million population. But there have been a lot of investors tend to buy the off-plan sale stuff and then resell. You see, where a lot of investors do very well is they buy off-plan, and because overseas UK homeowners can't wait 2-3 years for something to complete, and then they sell off for a year or sell on completion, and that happens a lot. So the next question is, which I think is quite interesting, is from Joseph asked, why does 60% of Londoners rent rather than buy? And I think I'll take that because I'm based in London and Melvin and Michelle are overseas and they're probably as surprised as me why so many Londoners buy. Well, there are a number of reasons, and sometimes I put this in when I do my talk and sometimes I don't. So number one, the reason that people rent in London is because a lot of people come to London for a job and then go back home, or it's a transient population. You know, if you're working in London today and then you get a job with the BBC and then they move you to Salford or Manchester, the soft costs of moving are quite expensive. So people come down and rent. That's number one. Number two, which is very strange to a lot of overseas buyers, and especially a lot of our clients, is that when in the UK, when people get to the age 18 and they finish school, the first thing children say to their parents is, when am I moving out? I want to move out. I want to go and live on my own. I don't want to live at home. Whereas, of course, in Asia, or Southeast Asia, a lot of the children will stay at home, and they may even stay at home until, until they get married, or sometimes even after they're married. And then they buy their home. Whereas in the UK, they move out and then they rent. So because of that, a following fact, if they're renting from 18 or 19 or after university, to build up the deposit to then subsequently buy a home becomes even more difficult. And the average age of a first-time buyer in London today is 32 years old. That's a big jump. And so, you know, these are reasons why people rent as opposed to buy. Flexibility, cost is obviously a big factor. And the ability to get deposits. So that's the reason for that. I hope that's answered your question. So a next question is for Michelle. I'm coming back to you, Michelle, because there have been quite a few questions about the houses, and I knew everybody would be excited on the houses. Well, Rosaini Rosa asked, I'm very interested in the Victorian style houses. How is the security, and is it at central London? And then she wants you to send her the details. So she wants to know what the security is like, and is it in central London? So Michelle, maybe you can do that because you're the expert.
Right. The houses are not really in central London. If the house is in central London, it's not going to be 1.4 million pounds. It's probably going to look more like 2.5 million to 3 million pounds. So this is in zone 2, just at the border, which is at the Brixton station, and of course the Clapham Common station. So you're not too far away from London Central, probably a couple of stops, maybe 5 to 6 stops to London. And of course, with regards to security, as it's a house, it comes with your fob, your own fob. And then of course there is a system where you can put in the code. So that's actually solely for the residents for that development. And of course, this is
a security alarm system for the house. Which
that's right.
You can link it to an alarm receiving center where they will, if anything goes off, they can call the police for you. So it's a secure, decent area. It's a very residential street, which Michelle can send you photos.
So it will be the same. It will be the same like other houses along that street where it's accessible from the main road and then entering into your house with your own keys. So because this is not an apartment building, there's no concierge, there's no additional fobs and all that access to the common areas. So it's just basically security into your own house.
Okay, thank you very much, Michelle. I think even though it's not in central London, the heart of zone 1, this is a family residential area. So whether you're going to come and live in it or you're going to rent it out, rentals will be easy because there's so many good schools around the area. This is, I know it's an SW2 postcode, but this is really Clapham, and Clapham is incredibly popular. In fact, myself, I live in Wimbledon, which is literally, Clapham is down the road from me, and I wouldn't live somewhere that's dangerous. So it's a very good family location. It's incredibly convenient. So a couple of questions have come in, and I think these are a couple of people coming in from non-Hong Kong buyers, which is interesting, is about residency. So maybe Melvin, you can do this. So Puneet just asked, do you get PR or residency benefit if you buy? do I get residency, and can I get permanent residence after a while? That was someone else from South Africa. If you could answer that, that'd be great.
No, if you buy a property, unfortunately, you do not. But then speak to migration agents who have this business investment visa. If I'm not mistaken, it's about £5 million. And a slight criteria or a part of your investment can be in properties, and other than that, approved government bonds. So that would be a business investment visa, where a small portion of it would be a purchase of a property and the rest in government bonds. But buying a property alone does not guarantee you a PR or a permanent residency. Yeah, I hope that answered your question.
100%. And the next question on the next person, Margaret asked, can I buy a property in London if I'm not a citizen? Because obviously some places around the world you're not allowed to buy it. Melvin?
Yes, you can buy. I am not a citizen of the UK. I have bought, and many likewise, our sales team has also bought. So you can. One thing about London is that, or the UK, is that it's very fair. The moment you put your money in, you can also take it out easily, or in terms of what I say, you can sell it off easily. In terms of the secondary market, there's no restriction, unlike certain countries where you need to sell back to the locals. For property in London, you can sell it to anyone. So your marketplace is a global marketplace. Even if I own a property in Malaysia, I can't sell it to the world. I can only sell it to Malaysians. You don't have that many international people buying in Malaysia, but investing in London gives you that global edge where the world is your marketplace. And that's why personally, I'm also shifting my portfolio to London, and hopefully more to come. Yeah.
We're the most open country in the world. Anybody can buy, anybody can put their money here. It's easy to sell. It's easy to sell. So yes, it's easy to get in, but it's equally easy to exit. So I think that's really, really important. So another question on the back of that is, someone actually, Panky asked, do you cover secondary property market? And so number one, you can obviously buy secondhand property if you want to. The process is a little bit slower, but yeah, of course we cover the secondhand market. It's just the process is a little bit slower, which makes it, you can't just pay a deposit and buy it like you do in other countries. You have to instruct a lawyer, you have to instruct a valuer, you have to do all of these processes which slow it down, but absolutely you can. So we've had quite a few questions on taxes. So I think that'd be quite a good one to answer. So Adeline asked, does inheritance tax apply to property if I'm a foreign investor? Melvin, do you want to take that?
Yes, it applies, but in terms of tax-free bracket, you get about £325,000 per name in terms of inheritance tax. So if you haven't bought one yet, and if you're planning to buy, a way to mitigate it is, of course, put more names in. And the inheritance tax is only on the net amount that you have paid cash for. So let's just say if your property is £500,000, you've paid cash on £300,000, you take a loan of £200,000, only the net amount that you have paid cash for is inheritance taxable. So if it's £300,000, you get a £325,000 tax-free bracket, you are not eligible for inheritance tax, or not affected, I would say. So it would affect you if you own like 10, 20 properties. But if you're just getting on 1, 2, 3, it's usually safe. Speak to us. We can do the tax planning and provide the professional advice as well.
100%. And that is, as Melvin said at the beginning, that is per person. So a couple with 2 children, that's £1.3 million with no capital, no inheritance tax on it. And if you get financing, look, we do it all the time. If you're going to buy a big portfolio, then you should do it through a company structure. But as Melvin said, we're happy to guide you and give you some advice. So the next question, which is a very big one, and I've had this quite a few, is about financing. So someone said, is there financing for foreigners? Justin asked, what banks will finance, will give finance available to buyers with overseas income? And what are the kind of rates? So let me just take it, is it available? 100% financing. Again, anybody can buy here, anybody can get financing, whether you get it from a UK bank or an overseas bank. But maybe Melvin, you can take what the mortgage rates are and what's available, what institutions are lending.
Yeah, so we work with Maybank in Malaysia. CIMB also do provide the loans for up to properties up to Zone 3. So CIMB and Maybank, these are the two banks that we work with in terms of sending loans over. And we also work with mortgage people or mortgage brokers that have banks or work with banks in London who recognizes foreign income. Now, one of the weakest foreign income, as you know, the Malaysian ringgit. So if that bank recognizes or foreign banks recognizes Malaysian ringgit, I'm sure they would recognize the Hong Kong dollar, the Sing dollar, etc. We also work with HSBC Expat, who has two branches, one in Jersey and one in Hong Kong, based out of, and their rates are pretty good. It's about 2.99% to 3.2%. The Malaysian banks differ between 3.7, 3.8, whereas if you want a high street bank or a bank based in London, there are interesting interest rates that's about 2.59 to 3.7. That is dependent on the bank. Foreign banks do provide interest only that you can opt for, and also HSBC Expat, they do provide interest only, which you can opt for. The Malaysian banks, unfortunately, it's a principal plus interest loan only.
And there are others as well. Standard Bank, Standard Chartered, who are in Jersey, will lend to Malaysian, Hong Kong Chinese, Singaporeans, Chinese, Indians, Africans. They are very, very open to business and good rates, and they take overseas income. They really want to see, though, when Melvin says about overseas income, they want to see what you've declared on a tax return. You really have to show what you're earning in order to loan money. They insist on that because obviously it's a loan and they follow strict government guidelines. But financing is very good. Another question here Doran just asked is how much can you help us fund? Well, I think, you know, in London, I mean, it's up to 70, 75%, but one of the Malaysian banks, Maybank, will do 80%. But we as a business, we honestly recommend about 65%. That's what we'd recommend. So the next question is quite interesting. Is kind of along the lines of what you said, Melvin. But I'm going to ask you because they're based in Malaysia. So Sue asked, if I buy property in my name and my daughter's name, who's a British resident, if I pass on, does she automatically get this property without inheritance tax? I'm a Malaysian. And I already have a property under my daughter, my husband, and myself. So she's going to buy in her and her daughter's name. If anything happens, will it pass to her without IHT because she already owns property in hers and her daughter and her husband's name?
I think if you, I believe you haven't bought yet. So if you haven't bought yet,
she already owns one with her husband and her daughter.
Oh, okay. So I think again, each name has that threshold of £325,000. So if that that portion that you hand over to your children is below £325,000, I believe there is non-inheritance taxable. So you just have to check what is the value or do a valuation of your property, or at that time when you pass on, I believe a valuation should be done on your property. Yeah. That's great.
That's great. And you know, look, you can ask us and we can give you a tax advisor if you need be. But as long as you have finance, that's a big advantage because that reduces the net value of the property. So this is a good question. Saeed asked, I know it's a very good time to buy. Well, thank you very much for Saeed for agreeing with us. Because of all the saving from stamp duty, and I agree too, that's why I bought. However, it might affect the house prices after the 31st of March. Then we can pay for the stamp duty and save money on the house prices. That's quite interesting, Melvin, don't you think?
I think that is very interesting thought. Whether or not the property prices would come down after that, we have seen the effect of Brexit, and everyone has said the same. So 2016 till now, property prices I've yet to see come down, and with this stamp duty holiday, it has created a pent-up demand. After that, I think Mark, you'll be a better person to answer what will happen.
Everybody wants to avoid that question. I mean, look, I wish I had a crystal ball And I wish I could tell you this is the bottom of the market or this is the top of the market. If I did that, I wouldn't be doing this because I'd be lying on a beach in the Bahamas. But the reality is, this is a good time to buy now because, as I said in my talk, is there's stock at the moment that developers have. Because developers throughout the whole of lockdown, construction has continued in the UK. We have had lots of building. The government has pumped money in. Construction was never stopped. And in fact, estate agents like ourselves, I was on the BBC because we opened very soon into lockdown, obviously with masks and following government guidelines. But the reality is it's a good time because there is so much stock. So because of that, you're able to get a deal. Now, I can't say after March of whether prices are going to drop off a cliff. I would be very surprised because I've never, ever seen prices drop off a cliff. It just doesn't happen. There are some adjustments, but I don't see why we should have that. Remember, what the stamp duty saving we're seeing is a government incentive. This is not sellers. This is the government helping the market, just like they're doing with Help to Buy. So my honest view is, if you can afford it, my advice to anybody is, if you can afford it, now's the time to buy. Don't look for the cheapest and the bottom of the market. Don't do that. You'll spend your whole life buying. If you buy shares, you don't imagine Google's going to go down, down, down before I buy it. You buy it when the time is right, and that's when you should buy a property. It's just at the moment you're in an opportunity situation that you can get a really good deal. One, because the developer will give a discount, and number two, because of the stamp duty saving. So I hope that answers your question, Sai, but you're more than willing to come back and ask another. Julie asked an interesting question. You say that the development will complete before 31st of March 2021. I'm not quite sure which one she was talking about. Is this guaranteed? What if there are delays due to the COVID situation worsening? So Melvin, you can take that, or maybe Michelle, you can both take it for your separate developments. Yeah. It says it's going to complete before March. Is it guaranteed?
I think the only guarantee will be to buy a completed property, and then you can just do the papers and do the legal completion. When I bought mine, the Clarendon, I think you're specifically referring to, there was no announcement on stamp duty savings, so I just bought it pre. But I think with brands like, and we always say go with AAA developers, people like Barclay Homes, Bharat, Taylor Wimpey. If they say they're going to complete, I think I believe them in the sense that they will complete on time. But of course, there is no guarantee in the sense that anything can happen. What if an earthquake happens tomorrow, a natural disaster, which is not avoidable, or suddenly, like you said, a certain wave of new COVID hit and the construction sites are all sort of jammed up. There's no guarantee to that. I think if you want a surety and a sure guarantee, then the best way to buy would be to buy, the best advice would be to buy a completed property. And that's where like the denizen or the houses would come in. And these are all completed. And just to add on, it's not that easy to source for houses like that you saw in London. We have customers coming and say, I want landed, and I want it near London. We can't pull it off from a magic hat and say, hey, these are a row of houses, because you know, as a developer, it's more profits for me to build stacks of apartments than build beautiful homes for people to live. I mean, that's a fact. And so if you are looking for houses in London, nearby London, and brand new, with you don't want any boiler issues, all the properties that you need to fix and all that, this is the apartment or the landed home to look at. And if you can get yourself to London, we'll be more than happy to show you around. We have videos done, and we can send that to you as well.
100%. Just on that, Melvin, the houses, the other things to mention, people ask, is there parking? Well, you're lucky if you can buy a parking space in some developments. It costs you between £50,000 and £350,000 for a parking space, 50,000 being the lowest generally. And this one, there is no parking. It's street parking, which is where most British people park. On the street, you get a permit, which is about £100. It's from £30 upwards if you have an electric car, and you just park it on the street. And it's very safe, and it's brand new. These houses will not have a problem. Comes with a 10-year warranty. And then the last thing to mention is this developer, they specialize in doing slightly different developments. They like converting churches. things like that. So it's something slightly different. And that's why they do the houses, as Melvin said. So another question that we are, Michelle, yours are both completed, because obviously the houses we keep labouring on about are completed. What about the other one? Is that completed, the Elephant Park?
Yes, Elephant Park is completed. So those who are looking at a smaller budget and wanting to enjoy facilities within the development and more security closer to Central, you can consider Elephant Park, because that's a master plan scheme. So what will happen is the future where we'll come up with the commercial spaces, the retail spaces, to make it like a full township. So that's where you can also invest in the future capital growth of the area. And of course, it's walking distance to London South Bank University, just 2 stops into Charing Cross, and then you can basically walk to LSE and King's College, and then you can go all the way up to King's Cross. That's where the Google and Facebook headquarters are. So they're not too far away. If you want to invest in that area and want to invest in a 2-bedroom under £1 million, this is something to look for.
100%. So we've got completed stock. We have other things, but these are our top picks at the moment with the discounts. I mean, seriously, for investment, these are the best. That's my opinion anyway. So there have been a few questions, and I'll try to lump them all together, about whether you should buy in a personal name or a company name. So one person said, shall one use a company to buy a property for letting in order to take advantage of the high deduction of mortgage interest as compared to buying as an individual? So the second is, I'm interested in buying with my company. Is it difficult to get a loan? And can a property be purchased via a company, and what are the pros and cons? So maybe I'll just take those if you don't mind. So shall we use a company to buy a property for letting because of the deduction of higher rate mortgage rates? So the government made some technical changes to how you can deduct interest rate. But as a non-resident, if you're only buying one property, and it's and you're going to buy it in a couple of names, buy it in a personal name, because the company costs of running it, that's a cost there. And you can still, the most people that the government changed on interest rate affected was people like me, UK residents, because what they did is they added the income to my UK income, and they'd only allow me to deduct the mortgage interest rate at the lower rate. So it meant I was lost out. But for a non-resident, a Malaysian, Hong Kong, Singapore, wherever you're from, if you're overseas and just buying one property, you have no income in the UK, so you start at zero. You have an allowance. So you don't have to pay. There ends up being almost no tax to pay. And within a company, it's just that little bit. It's another layer of administration and cost. So if you're buying one property or two, I would buy in a personal names. Buying in a company is fine. Is it difficult to get a loan? Absolutely not. You can easily get loans. All the banks do it. It's a commercial loan rather than a personal loan. They look at the property. Often they look at the individuals. And again, 65, 70%, depending on who you are and what the property is no problem. And the last question is what are the pros and cons? Well, the pros are that you can deduct the interest at the higher rate. You don't have to pay dividend tax to take it out if you're a non-resident, so you only pay a lower rate interest rate. So for multiple properties, it's really good. The cons are there is no allowance. You pay the tax on capital gains tax without an allowance where you get a capital gains tax as a personal. That's a really brief little run through, but if you want that information in full, as I said, a few of you have asked those questions, then we're by all means get in touch and we'll come and answer them. What another one is, so this is maybe one for Melvin. The perception, so Tim asked, the perception is there's an exodus from London at the moment with people working from home. Does this mean there's a price crash coming? Because everybody's going to be working from home.
I think this is a similar question, yeah. But I can relate to, as a lettings agency, what we are experiencing now. A crash can only happen if there's a glut of stock, like what you're saying. There's nobody in London, nobody's paying rent, everyone is out of a job. But in Malaysia, we have about 200-300 landlords that we manage. Yeah, and I would say the unlet properties for Malaysian landlords now stand at 10. Yeah, 10 unlet, 10 that we find that it's a bit tough to let. So none of our investors have panic sell or panic sold or any fire sale at all. In fact, some just ask us to test the market, and if the valuation coming back does not make sense, they have the capacity to hold. The difference between London is that the 1% of the world invest in London. Yeah, and these people, on a Malaysian perspective, the 1% of Malaysia invest in London. These people have the capacity to buy in cash. If you're talking about a crash happening, you will look at countries where people have only 10% to pay. They max out their loan 90%. When the negative equity comes on their property, the loan value is higher than their property price. That's when the trouble comes. But what we are seeing in London is that rents are still coming in. We are monitoring the rents every day. Offers are still coming in, like Mark said, albeit some discounts on the rents, and we have managed that for our landlords, for all our landlords, a give and take situation. I would say we have done that pretty well, and most of our landlords are happy. So when you have an economy where people are still working and paying you rent and assisting you on your mortgage, I don't see a big crash coming in.
I agree. I mean, added to what Melvin said, 100% right. Yes, there are more people working from home, 100%. But people don't work in London or live in London because of, people work in London, sorry, because of the jobs are there. But they don't only live in London, or whether that's zone 1 or zone 6. They don't live in London because of their job, because it's easy to commute with Crossrail coming and all the transport links we have is pretty fantastic. It's because London has an atmosphere, an ambience. It's where the restaurants are, it's where the hubbub is, and people want to live in London. So honestly, I don't see any crash coming. Yes, there will be people that will work from home, but there will slowly be a move for companies to come back and work back in the office, and people will come to have some interaction. Working from home with Zoom is much more difficult. And I think we're going to see a drive with companies coming back, obviously, subject to this second wave getting out the way. So, sorry, we've run over about 10 minutes. I'm going to answer, I've got a couple more questions that I think is really useful to answer. So, one person asked, with lower property prices, the rental is, however, also lower. Is there any net gain in terms of rental yield for buying? So I think the question about that is Melvin, is do you actually get any positive cash flow if you buy it? Net return?
Well, I think that goes back to how much loan that you take. What are the interest rates? As you know, interest rates are an all-time low now. So if you want a positive cash flow, like what Mark said, or like what our directors and Mark and Anita has done, they usually take about a 60% loan or a 50% loan or a 65% loan. Then the property will sort of net out. The property will take care of itself. Or you can opt for an interest-only loan where you pay the interest only, a buy-to-let interest-only loan. So you don't pay down the principal. You take about 50%, you pay 50% cash, and that then you will have quite a bit of amount in your pocket in terms of positive cash flow. So these are the little tweaks that you can do. But then again, it depends on the interest rate. It depends on the loan margin you're taking and whether it's an interest only or principal plus interest. Yeah.
Okay, and a couple of questions on the properties. The first one is Melvin Sankir asked, are there any 2-beds available in Denizen at the moment?
Yes, there are still available, which we'll be more than happy to email to her right after this.
That's perfect. That's great. And Michelle, someone said, are the houses, do they have 4 bedrooms or 3 bedrooms? I think they have 4 bedrooms.
4, all are 4 bedrooms, yeah.
And do they have 1 living room or 2? Because I think he's wondering if you can make it, if that's 4 bedrooms with 1 living room or 3 with 2.
The floor plan draws the living room on ground level and bedroom 4 on ground level. Level 1, there is 2 bedrooms, and level 2, there's 1 bedroom. But I think you can actually put the living room on lower ground, which will have the extension to the courtyard, your own private garden, and then have the living room as another bedroom if you want to.
Okay. Yeah, I think I've seen the houses myself. I've got to say they're pretty fantastic. And if you had a very large family, you could squeeze in 5 bedrooms, but they are 2,000 square foot. Every other house in the street is only 13 to 1,400 square feet because this one has the basement. That just adds that much more, adds that space, and it's brand new. So I think that's, I mean, the last question here is from Ruth in Hong Kong saying, for Hong Kong investors to buy a buy-to-let property as income, can the investor enjoy tax-free allowance? Well, when you mean tax-free allowance, we always look at the capital gain we're going to make. And yes, you get a cap. Every single person, UK resident or non-resident, gets a capital gains tax-free allowance. And obviously the inheritance tax, £325,000 per person. On income, you pay tax. You don't get a personal allowance as a Hong Kong resident, unfortunately. But the tax will be very low when you take off interest and you take off all your costs, because you can deduct all of your costs. So I'm sorry, there are a few questions we didn't get around to answer, but I hope you've enjoyed today. Thank you very much, Melvin. Thank you very much, Michelle.
Thank you, everyone. Thank you.
We'll send out the presentation to anybody. If anyone has any questions about any of these projects, you can email me, mark@benhams.com, melvin@benhams.com, or email the main webinar email. We'll come back to you and answer any questions, but we'd love to help you. The market is really busy in London at the moment, and the weather's nice, not too bad either. So hope you enjoyed it today, and thank you once again for joining us.
Yeah, just to add on, for those who want the stamp duty calculator, we can send you the link. I think everyone wants to calculate on their own how much money they're gonna save. Yeah, we do have that ready, and the stamp duty email as well. Yeah, or the write-up. Yeah.
Brilliant. Well, thank you very much. That's the end of our webinar today. I hope you enjoyed it, and please get in touch with any questions. Thank you very much. Bye-bye.
Thank you. Bye.
Thank you. Bye.
Bye.